and thank you for keeping tuned. This is Smart 24 and in particular financial markets. I am your host, Anthony, and I'm with Mr. Sydney Ampere, who is from SBG Securities as an institutional and corporate trader, giving us advice here and there on how to invest safely our savings and in capital markets. Before we went into a break, Mr. Ampere, we were talking about some of the products that you have and the avenues we can go through to save. And we were still breaking down the equity market.
Yeah. So let's dive right into it. So the equities market, like I had said, we at SBGS, we are trying to create a platform, right, where one will be able to trade global equities, right? I'm in Uganda. I can have ownership, right, of a share in, let's say, Tesla, Microsoft, or DHL, right, in Germany, and also earn the dividends straight to the app, to our app, that you can always liquidate in any ways that you'd have to, cash, account, anyways, So, so the current situation with our equities market in Uganda is that it has really failed to grow. I'll give you a case study. Uganda and Vietnam, the country, right? We both opened our capital markets, securities exchange in the same year. All right? But Vietnam at the moment does close to 100 million worth of turnover, USD.
Wow.
On a daily basis. So it shows you that the population, right, the people, they understand the benefits of capital, of capital markets. They believe in capital markets. So back then, of course, the president, just like our president here next to Kenya, okay, they tried to make it possible that companies, local companies, that people could relate to, they're able to understand. And they're able to understand and appreciate, right, exactly the benefits of this particular capital markets, especially the equities capital market. So it presents us an opportunity here in Uganda to say, how can we put the bugged tracking behind us and start a new chapter? So you find that the average Ugandan is 16 years. That's averagely senior 4 candidate. All right. How do we change the mindset of that person, right? How do we grow with that person, with a 16-year-old, until by the time they graduate campus? So you find we are trying to establish a playing field for a 5-year project at SBGS. We want to grow with that individual as young as they are, right? Make them understand the opportunities available in capital markets, right? Make them appreciate, okay, what they have to offer, the risk they have to offer, how it is easy to measure the rate of return, for these particular assets. So once we have finished with this person, with the average Ugandan, that 16-year-old, up to the time they graduate a campus, those are like 5 years. We believe they would literally appreciate what we have, then spread the gospel across, right? Such that the generations, we have set the precedent, right?
Yes.
All they have to do is come just along with it. And that's how we can grow our capital markets here in Uganda. But going back to the products, we talked about the equities market here. So secondly, we talk about the debt markets. So debt markets, these are basically treasury bonds or bills or corporate bonds or bills. So people usually have a hard time right, understanding the word bond, because a bond is not something so easy to explain to anyone, right? So I usually have a simple term I explain it to everyone, right? So merely a bond is, assume a situation, right, where you're a money lender. You're a money lender. The government of Uganda or any other government, right, is your client, and the interest is the coupon or the yield, depending on the markets you've come in. So essentially, you're just a money lender. You're lending money to the government, to the corporation, right? Just as simple as that.
Coupon rate.
Yeah, just as simple as that.
Value.
Yeah.
It's just nothing.
There's nothing much to it. It's just as simple English as you're a money lender and the government is your client.
And maturity?
Yeah. Yes. So so the maturity is how long it will take, right, for the government to pay you back at an interest of this paid annually twice a year. Honestly, I mean, how hard is that? Hard to understand.
Yeah.
Okay.
Some people also wonder the maturity usually is the date. Sometimes you go and check the Uganda Security Exchange always lists those bonds on their website, and the dates usually you see the bonds, but the dates are either past or they are way ahead of time. Sometimes people get confused. They're like, can I buy this bond? Can I? They don't know what to do.
I get you. So the bond security, right, is not that once you buy it, you die with it until it matures. Now, the ability that you're in the secondary market, you're able to sell it to someone else who could be interested in it, right? Either at premium, right, at par or at a discount. So it's dependent on you, right? As as the seller in particular. I like, you know what? I've spent 2 years with this bond. It's a 10-year bond. I really need the cash. I can't wait for government. Let me just sell it, right? So once you're going to sell it, you come to us. We outsource for your party. They buy it. And bonds in Uganda are very liquid. It's a very liquid market. You're easily liquidated. Yeah. It's just that you have to understand the taxation implied currently. If it is a bond less than 10 years, you're subjected to 15%. If it's more than the 10 years, it's 10%. On the coupon, not on the entire bond. On the coupon.
So your coupon 15% or 10%.
Exactly, okay. Yeah. So that's debt markets. Yeah. So now when we go to derivatives, right? So a derivative is basically a security with an underlying asset. Yeah. So perfect example, I'd give you like a collective investment scheme, right? So to the mere eye, right, it is just a single entity, it's just a single security, right? But that single security has an investment manager attached to it that invests actively in different assets that we have mentioned earlier.
Yes.
Either equities or bonds or commodities. But in Uganda, by the CMA regulation, they only stick to debt markets and equity markets. Yeah. So so I find that there's a wide range of products that we can provide under that derivatives.
But I didn't quite understand well the difference between the derivative and the unit trust. You said it's kind of the same, but
it's the same. It's the same. So a unit trust is an example of a derivative. Okay. Yeah, because it has an underlying asset behind it itself. At the end of the day, so of course I'm going to mention things like options or swaps, so that will confuse an everyday, you're gonna. So I'm trying to use something relatable right now in our market that can best describe a derivative.
Now, before someone actually gets started with SBG, what should they know what should they have to get started? Is there a minimum amount they should start with? Is there, a certain level of investment that they have to go through?
I get you.
So, yes, how do they get started?
So, for the debt markets, those are the bonds and the bills.
Yes.
Minimum is 100,000.
Okay.
Right?
100K.
Yeah, 100,000. Then for the unit trust, minimum is also 100,000.
Okay.
Yeah. So we are not yet live on the unit trust. We are still figuring out. Then we shall communicate once it's official. Then for equities, the minimum is literally the share price of 1 unit of ownership. So you find that MTN, if you have 185 Ugandan shillings, you can actually be a shareholder of MTN.
190 this morning.
You can actually be a shareholder of MTN. Just as simple as that. Just as simple as that. Yeah. So you could call our lines 03031 222 4965 or 4972. Or you can send us an email on sbgqueries@stanbic.com, and we'll be able to assist you as we are still, are trying to develop our future app. Which will be coming anytime now. It's going to be rolling out anytime now.
Then how about the SCD account? To have one before I invest in as well the debt market?
Yeah, definitely. Yeah.
How do I create one?
So since these are intangible assets, right? You need an account to have them sitting under, right? So for equities in Uganda, you're supposed to be having SCD account, Securities Central Depository account. Then for bonds or for the debt markets, you must be having a CSD, Central Securities Depository account. It's confusing at the end of the day, but
SCD is for?
SCD
so
is for equity.
Central Depository account.
Yeah.
That is for equity.
Equities, yeah, SCD.
Yes.
SCD. Then there's a CSD.
Still Central Security.
Exactly. For bonds, yeah. For bonds. Exactly, yeah. It's confusing, yeah, at the end of the day, But, that's much about it. Because we are trying to, so our platform on our website and our app, you'll be able to apply for everything. Right through. Yeah. Quite easy, yeah. So we are going to be rolling out on that as well in time now. Yeah.
Now we see the activity on the market, like you have said, is not so good. And let's now look even in the current situation in Kenya.
Yeah.
For all the cross-listed companies, we've been following their stock prices.
Yeah.
All been doing so badly.
Yeah.
Most of them, especially the ones cross-listed.
Yeah.
Should this cause worry? And what is even the cause behind this?
So for Kenya, so equities markets in Uganda, right? When it comes to volume, it's entirely institutional. So fund managers are the ones that play here, right? Global fund managers, right? They determine, the volume, right? What to say. But the retail guys, right? The retail guys determine the share price. There was a time when MTN dropped from 200 to 160, right? So it came in a time of school fees when Ugandans needed school fees for kids to go back to school. So a normal Ugandan was willing to sell his shares in MTN at any price. Yes. So it kept on plummeting, right? Until it got to 160. So that's when the institutions now started coming in, right? Taking positions at different levels. So when the demand for cash was eventually, lower and calmer, right? Yes. So we started noticing how the stock now started gaining back its stability from 160 to 165 to 170, as currently at 190 to what it recently hit 195 as well. Yeah. So that's the landscape. Now in Kenya, the election's coming up, right? So institutions are like, I'm not going to bet on equities, right? I don't want to go to equities. It's risky. For me, let me liquidate my position in equities. I go for the bonds.
Oh,
Because at least I'm certain of a fixed rate of return. Either short term or long term.
The coupon rate is high because government wants money for elections.
Exactly, yeah. So today it released an infrastructure bond, a 10-year bond in Kenya, infrastructure bond in Kenya. It's going to be auctioned tomorrow. The coupon rate is going to be decided at the auction, right? By the forces of demand and supply. They will determine exactly what the coupon is going to be on that year. So we are waiting for it. So we find that the government, is trying to outsource money with lucrative interest rates as well. But these institutions that are leaving their positions came with this. So that's why you find that most Kenyan companies have actually reported a very nice dividend, and that's even why that central bank is allowing banks to pay
the
dividends. Unlike in Uganda, yet we are both regulated by the same body. They have the Capital Markets Authority, we have the Capital Markets Authority. Same framework, same legal framework and all, but at the end of the day, it just comes, to a governance point of view. Yeah, so for Kenya, given that the situation that they're in, they allowed them to do that. In Uganda, they're yet to decide. Yeah.
You talked about something very interesting. Most people, when they're investing in these things, they worry so much about the share prices, especially equities. What are factors that really influence the share price of a certain company? External and internal. Yes. What are some of those factors you would outline?
Well, you see, at the end of the day, right, it all just comes to controversy. It all just comes to controversy. Because you sit down, and you sit down and ask yourself, okay, honestly, why would this happen? Right? Yeah. Why would a company drop in share price this agile? Now, in Uganda, in particular, you find that companies like MTN, right? There was need for cash. There was need for cash. So the fact that people made it easy to buy the shares, they also wanted that money back, right? And our economy was not well educated in terms of equities. So you find someone calling in and asking you, I bought MTN shares. What's my fixed rate of return? So explaining to someone, explaining to someone that, hey, look, this is not how it works and all that. People would walk into offices, and be like, I need money. You're like, but the liquidation process, it takes a minimum of 3 days and all that. They're like, no, I thought I gave you the money over the phone so I can come in, right? So we still had that bitch, or incentivizing a public, right? In informing them exactly what happens in the equities market and all that. So these big companies, these big corporations, the Amazons, the Apple, the Teslas and all that, their share price dropping, or going up, could be affected merely by anything controversial. Honestly, a tweet, anything, anything controversial. That's so volatile. Anything controversial. But here in Uganda, it's basically forces of demand and supply. I'm not going to lie to you, because now you would expect Bank of Uganda not allowing banks to declare a dividend, right? The stock, to start what banks stocks start plummeting, because essentially people would be exiting bank stocks to go for stocks that offer their dividends, right? But that's not happening. So you find in Uganda, in Kenya, majorly in East Africa, right? A controversy doesn't play much of a big role. At the end of the day, it is demand and supply, right? I want this, you can offer it at this price, like that.
Yeah.
Yeah,
Okay.
yeah,
Wow. Wow.
yeah,
Thank you. Very beautiful conversation right there. Thank you very much, Mr. Mpire.
Yeah.
We've been talking investment and saving, and as well as in particularly the capital markets of Uganda. And he's from SBD Securities. They offer all these services. You can reach out to their website and get to know what they do. And now, as we part, just about 30 seconds for you to give the viewers your parting shots.
Yeah, so basically like something out for the viewers.
Yes.
Yeah. So I just want to encourage every single Ugandan out there, right? We know you have investments, right? But at least take it as initiative to have a portfolio that is divided by two: active investments, right, and passive investments. Passive investments, you could be looking at securities that we offer, right? Active investments, you could be, owning a business, doing agriculture, as per se, or being in real estate. The beauty about this is that this passive income that you're investing in these securities, this is something that would help you in future in case of anything, in case of any illness or trouble, and it's a security that is, that is regulated by the Capital Markets Authority. Yeah. So at the end of the day, you are in safe hands. Yeah.
Well, thank you very much. There you have it, ladies and gentlemen. This is it for today, and we'll be seeing you tomorrow. Next is the news with Mr. Fred Makubuya and team. Don't go anywhere. This is Smart 24, and I'm your host, Anthony. Have yourselves a wonderful day. See you tomorrow.